All right, so buying a house is on everyone's wish list, and people toil hard day in, day out to realize that dream. A home loan takes you closer to buying the dream house, and while most people take home loans for long tenures, you would be better off if you actually prepaid your home loan in the early years of your loan tenure. On the ET Money show today, we have on board Abhinav Kaul, Vice President Strategic Partnership, bankpassr.com, to tell you all that you need to know about the benefits of prepaying your home loan in the early years. Good evening and welcome to the show, Abhinav. Buying a house is actually a dream for a lot of Indians, and this kind of a purchase, a lot of time, is very well planned. Now, looking at the raise in the interest rates that are also going to continue, at least it looks likely for a couple of few quarters maybe. If someone wants to really pay off or prepay their loan at this point in time, this definitely needs a lot of liquidity in hand, a lot of planning in hand. One needs to really figure out the budget and the kind of money they are making and the kind of money they would need to prepay the amount. But then how does the maths over here work? If you could just explain by giving an example.
Yeah, good evening, Kavita. See, like you rightly said, the interest rates on home loans are now going up, and this is the time when I guess most of the home loan buyers are feeling that pinch, and most of them would now want to see how they can reduce that burden. And one of the best ways of doing that is by prepaying your loan. Now, what basically is prepayment of loan, right? It's in simple terms. Let's say someone is running a loan for 50 lakh rupees as principal outstanding. So the financer actually gives the consumer an option to pay a part of that loan and reduce that amount from the principal outstanding. And the EMI or the interest is then calculated on the remaining principal outstanding. So in simple terms, that's what it basically means. Now, the best way to prepay your loan, or the best time basically to prepay your loan, is when you are in the initial years of your loan. And I'll explain you why. Uh, See, all the home loans that we have, the interest component is front loaded. Now, in simple terms, if there is a EMI, a portion of that EMI is your principal and a portion of that EMI is the interest. However, what happens is that in the initial years of that loan, the interest component in that EMI is much higher compared to the principal. And that's what I mean by saying the interest is front loaded. So the best time, in fact, to prepay the loan is when you are in the initial period of that loan tenure. Uh, and yes, obviously, it needs a lot of planning. It needs a lot of liquidity. It needs a lot of precision planning in terms of where would those funds come from. And what we advise our consumers always is to make all of those decisions and keep all of those things in mind when you are going for that home loan. And just to give you an example, let's say there is a 40 lakh home loan running for a 20-year period at a 7.5% rate of interest. Now, what would happen is that if that prepayment is done initially, let's say in the second year itself, we make a principal reduction by 2 lakh rupees, while the overall interest would be 37 lakhs, it would come down to 32 lakhs for that entire period of the loan. However, if the same 2 lakhs is put as prepayment in the seventh year, that reduction comes down only to 3 lakhs instead of 5. So that's the impact of prepaying your loan on time. And as the loan progresses, what you are left with is more of the principal component. And that's another discussion that basically people see it as an opportunity cost. Now that they've paid most of the interest component, might as well invest that money which is with them as liquidity into something which will give them a higher return than prepay the loan. So hence the thumb rule is prepay in the initial years, which will give you the maximum benefit.
Right, Abhinav, that was very well explained. Now, let's talk about the process and the benefits. I mean, a lot of it you've covered in your answers, but you know, a lot of times it's not possible for people to make a repayment of their home loan. But then, as explained by you, the sooner the better, and especially in the early years of your tenure, you should be able to do that. But how wise this decision will be, considering we are discussing this topic, we are helping viewers to understand the benefits of the prepayment. But then, do you think it's the right thing to do? Because you also have to consider the fact that home loan is a good loan. Okay, people want to have a tax benefit for a longer period of time on their portfolio. A lot of time it's a joint loan, so both husband and wife get the benefit of it. So how do you actually think this is going to help if one wants to really prepay the home loan?
Right, right. So, Kavita, there is no single answer to this question actually. It actually depends on the individual. How much do they have the capacity to prepay? What instruments would they want to otherwise park their money in? But as a thumb rule, what we see is that if you are in the initial period of your loan, it is always advisable to prepay or use that liquidity and uh, reduce your principal outstanding on the loan, uh, because whatever math you do, right, if you are in the initial period of the loan and you are trying to prepay it, I would say 9 out of 10 times it will come out on top as the better choice than to maybe park those funds somewhere else where you might expect a higher return, uh, but may not end up getting those returns. So it's basically an individual calculation. Everyone will have to kind of sit on the table with an Excel sheet to see how much can they repay first of all, because like you said, liquidity is also a big issue, and one should have those kind of funds to reduce their burden by that much amount. But if you have the liquidity with you, do the analysis. What is the rate of interest that you are currently paying? If you prepay, how much does the overall interest component come down by, versus what is the instrument that maybe you want to park your funds in? So that's a very individual calculation, but this is how a consumer can actually evaluate it on their own.
Abhinav, let's analyze or let's compare this entire thing with someone who wants to continue with the loan tenure. Now, looking at the rising interest rate scenario, do you think it's also advisable if you get an opportunity to switch your loan to a different bank? Can that be done if you're not able to prepay the home loan?
Yes, yes, definitely, Kavita. That's the second best option because, like you said, and like we are seeing across, the repo rate is going up, and with that increase in repo rates, every time we are seeing an increase in rate of interest. And in the last 6 odd months, home loans have gone up by almost 200 basis points. So the other option, obviously, with the consumer is to switch the loan to a lender who is ready to maybe give the loan at a lesser rate of interest. But again, we will have to do the math here and see what benefit are we getting out of it. The difference in the rate should actually be substantial enough to net off whatever charges that the new bank or the new financer may put on the disbursement of the new home loan. But yes, if there is liquidity issue and a consumer today is unable to prepay the loan, the next best option is to switch that loan onto another lender, uh, where you can actually get a delta or a reduction in the interest rate, and then obviously you can kind of calculate those savings as an individual.
Abhinav, we are talking about home loan. Now, as per your experience or the kind of interaction you've been having with banks or consumers, do people actually prepare their loans? What could be the percentage of these kind of people?
Yeah, see, a lot of people actually prepay. And see, when we say prepay, it doesn't mean that the entire amount is paid, right? A large population of people actually, when they take a home loan, they do plan in terms of when would they be getting funds in the future. Because let's say if there is a 25-year tenure, right? on an average rate of interest of around 8.5%, you would end up actually paying almost double the principal amount as interest. So if your principal is 50 lakh, overall you would maybe end up paying 1 crore plus. So consumers actually do calculate that, okay, I in the second year may get this liquidity which I will park. In the fourth year, I'll get it and I will park. So uh, there is a lot of financial awareness today, and a lot of consumers actually come forward, and there are different means in which you can prepay the loan. You can do a one-shot payment in the entire tenure of the loan, or you can actually do monthly or annual prepayments. Now, some financiers may not allow more than 3 or 4 prepayments a year, and the consumer will have to kind of plan accordingly, right? So there are different modes in which you can prepay. And like I said, a decently large population of consumers is now completely financially aware. They know what a prepayment actually is and how can it benefit them. So a large population of consumers actually do prepay from time to time.
All right, so these are the benefits if you want to prepay the loan. You definitely reduce your debt, and looking at the interest rate rise scenario, the obligations over here can be reduced and significantly reduced, in fact. So these are the tips and tricks for you if you want to prepay your home loan. Thank you so much, Abhinav, for being on the show and helping our viewers with that. And we will slip into a short break, but then post that we'll be having Sudeep Bandyopadhyay with us, who will talk about the market's high and is there a fall coming in soon. We'll analyze the market highs and the beginning of 2023 with Sudeep Bandyopadhyay after this break.